Stocks near session highs, and according to J.P. Morgan, the yen carry trade that wreaked havoc with the markets this week is already about three-quarters unwound. So while it's mostly over, well, it's not completely over, but are we far enough out of the woods? Dom Chu here with today's Market Navigator.
So what's interesting about this, Kelly, is if you take a look at the reasons why it's so important, what if the Japanese yen was giving us, the investors overall, this kind of signal about whether it's all clear to run headlong right back into where we ran into before, which is that mega cap growth, Magnificent Seven, large cap trade? We've got Todd Gordon, the founder of New Age Wealth Advisors, and he thinks just that. And he was previously right in the middle of that 2008 yen carry trade calamity. Todd, you're looking at the Vanguard Growth ETF. And what exactly are you seeing about this ETF and the yen that gives you an idea for how to play it and how to position?
Hey guys, how you doing? And Dom, shout out to you because I know you have an FX background as well. But yeah, I think it's a big August thin summer swoon. I don't think this is the start of something catastrophic. I think this is a buying opportunity. I rushed back from vacation here this week to make sure when I saw the Nikkei was down 12%, I said, uh-oh, what are we doing? But things have stabilized. I like growth. I like individual growth names, VUG, if you want to play it. Pull back into the old 2021 high, uptrend, moving average, about 340. But I think growth is stable here, Dom.
All right, so the Vanguard Growth ETF is something you're looking at. You've also got an interesting chart back from 2008 to kind of 2024 to give us some perspective on just how much, Kelly, that carry trade severity was then and now.
Right. It's people are saying the yen carry unwind is similar to that in 08. And if you look at the severities, you said it's not even close. I mean, that was a bloodbath back then. And it was, of course, spurred from the GFC and the housing crisis. This is a thin summer. This is more of a reaction to, I would say, a July, August push through the 4% in yields, caused a rotation into small and mids. People decided there was large cap growth had run too far too fast. And then the yen carry unwind was a result, I think, more so of domestic interest rates. But again, this is much smaller in scale compared to what we saw in 08.
Todd, the thing that makes me uncomfortable about that comparison is I don't think of 08 as a yen carry trade issue. I think of the global financial crisis. So why do these things tend to go hand in hand? Is it telling me that there's some kind of macro trouble lurking, or that they just tend to kind of reprice at the same time?
You're so right. It was interesting because it was the housing crisis that originated in the U.S. that spread everywhere. We had highly leveraged mortgage instruments that were being traded everywhere. But so many macro traders were borrowing cheaply in Japan and investing overseas, say on Australia at 5% bonds because China was on the other end of their development. So it's more of a reaction to the cause, which was housing, right? In this case, Kelly, I think is on a much smaller scale. I really think some force kind of pushed the market through 4% U.S. yields. The yield differential that you can make was narrow, and they said, "Oh, we got to take that trade off." So I don't think it's the cause. I think it's the symptom, and it creates buying opportunities. I think in the growth stocks, which I think the AI story is still very strong. We have interest rates below 4. We have a yield curve coming out of inversion. We have Nvidia coming up. It looks scary for a minute, but it's August. It's thin. I think it creates a good buying opportunity. If I'm wrong, we're going to adjust, but I don't think so.
Very good.
All right.
Todd, thanks very much.
All right. And just to kind of put a point on this thing, Kelly.
Sure.
He mentioned my FX background. There was a time when many of the traders I talked to used yen and yen crosses like CAD yen, Aussie yen, Euro yen as a gauge for risk appetite. So it's certainly one of those navigator things.